Very good morning to all of you. So first of all, on behalf of Department of Finance, I would warmly welcome Mr. Senaka Kekiriwaragodage for coming to our session with all his busy schedules. So your presence is really appreciated. In today's session, we are going to talk about the economic situation of Sri Lanka. As a citizen and as a student, I'm sure you are very concerned about what's happening in Sri Lanka today. In the latest surveys, it says that 1 out of 4 Sri Lankan citizens want to go out of Sri Lanka and they don't want to come back. And on the same side, we see we have a debt crisis. On the other side, we see inflation is really going up with a unprecedented manner. On the same side, we see a monetary crisis. With all these crises, and recently with supplies crisis, we are concerned what's really going to happen and how it's going to be recovered. As a citizen, we are very concerned about it. So to address, to discuss on this, we would like to invite Mr. Senaka to enlighten us about the current situation and as a country, how we should be recovering the situation. Over to you, sir.
Thank you, Dr. Chandra. And a lot of challenges in front of us. So let's see, I think probably what I will do, I will start by revisiting where we are today and sometimes what led us to be here and how we could improve from this situation, because there's little point in going back and complaining about what took us here. A lot of reasons, a lot of people probably responsible for it, but what we could do and who should do it. Sometimes it may be little beyond us, but I think we could put pressure as a pressure group, as citizens, as students, as business people, So we could have a collective force still in terms of influencing that eventual decision. So that's probably what we are trying to achieve. So it will be a long conversation. I'm sure you will hear a lot more things from economists, politicians, civil society activists. But I think it will be an ongoing conversation. It will not be an overnight work as well. So it will be probably few decades of work that will require to put us out of this and probably build on what could be more sustainable as an economy, as a country, and as citizens altogether. So great. So we'll start with the challenges where we are. In my life, short life, right? So I could recall probably about 3 instances in the economy, different points in time, where Sri Lankan economy was seriously challenged. Some of you may not remember some of those, and some of you may remember more than me, right? First thing I could recall is probably 88, 89, where the country was entangled with 2 wars in effect. The LTT-led war in the north and the JVP insurgents in the south. So economy was on a free fall, no one was in control, and we had informal curfews, business confidence was probably all-time low, a lot of debts, and economy was seriously challenged. Not only economy, politically, and even human lives for that matter. So maybe the second instance I could recall is in 2001. What happened in 2001? I don't mind a little bit of interaction, despite it is not really in the schedule. What happened in 2001? Dot-com bubble moved global. I'm pretty much talking about Sri Lankan issues. No. Tsunami was in 2004, I think, right? 2001, LTT attacked the airport. It's a disaster, right? It's a nerve center. And investor confidence would have been at all-time low, and the war is coming home, right? War is coming closer to home. It's in pretty much in Colombo. I think there was instances where the port was really threatened, probably a couple of detections of attempts to breach into the port, and airport attack, everyone knows about it, and tourism would have just completely went out of the window with that, and economy was again in serious doldrums. The next, probably more recent instance is 2007-8. It was not one instance, but probably a period where the war was probably at its peak, 2007-8, and later we knew it was the last stages of war. Inflation was through the roof. I remember we hit all-time high of about 28%, if I'm not mistaken, inflation rate, maybe in 2008. Commodity price to all-time high. Interest rates measured by, say, treasury bond rates was just reaching 20%. And again, business confidence was very low. We didn't know where the war is going, could it end, and it was consuming a lot of resources. And again, the business confidence was quite low. But I don't remember, maybe my economic knowledge was not that great then. I don't remember we really talked about a bankruptcy in any of these three instances. So what is bankruptcy? Not being able to pay our debt, pay our obligations. But now we do talk about it, right? We do talk about bankruptcy. We don't have enough money to pay our debt. Maybe because in all these times we had, in those previous times I mentioned, the commercial debt would have been quite low, the commercial borrowings. It would have been mainly bilateral lending, multilateral lending, IMF, ADB, and so on. And we could have talked to them and negotiated. But now we are in a different situation. We have commercial lenders, mainly through the international sovereign bonds. I think we have a debt stock outstanding of about 15 billion. And as you know, there's a maturity in a week's time, 500 million with interest probably about 550. And next mid of the year, July, we have another 1 billion to pay. So that's commercial debt. And you can ask them, but why should they show any mercy to us? It's not IMF, it's not a multilateral agency, it's not a global institution. Those could be people who have lent to us. So we are in a bit of a unique situation in terms of a challenge. We are on the verge of bankruptcy, we can say that, right? And have the countries being in that position before? Of course, many. And can we come out of it? We should. I mean, there's no choice. We should come out of it. How? So probably we'll look at the exact form of challenge and what we could do to get out of it. So maybe I'll move on to the different types of challenges, main economic challenges we face today. The main thing is our foreign exchange reserves are coming down. At the beginning of 2020, we had about $8 billion in reserves. Of course, as you see in this graph, that number has been coming down, and we reached a very low point, 1.5 billion in November, and December we have got up to 3.1 billion. Various discussions are there, how did we get up to 3.1 billion? And although central bank has not formally announced, most likely that is by withdrawing that, drawing down that swap arrangement with China of $1.5 billion equivalent. Could there be some conditions? Is that free money? I mean, there are some speculations it may not be exactly as free as the other $1.5 billion, but yet it will add up to your reserves. But the problem is, still it is a small number, 3 billion. And we do import about, I think last year, 2021, our total imports were about $21 billion. Exports are $12 billion. So on average a month, we import closer to $2 billion. So how much money we have? Usually you measure foreign reserves as number of months of imports. So this could be about 1.5 months of imports. But it could be a little trickier than 1.5 months, because if the money is not freely usable, for example, if that Chinese swap we can only use for purchase from China, then it may not be that 1.5 months, it could be little less than that. And of course, 500 million go from this number, so we will be talking about maybe 2 billion or less than that again end of January. So probably less than 1, depending on what we could do with that new $1.5 billion. So we are short. So how does this impact to us? We see that on the road, right? How does it impact to us? We see the shortages because we don't have money. I mean, this is no different to a family in distress. So I would probably use an analogy. Sri Lanka, if Sri Lanka is a family, so probably maybe 2 members were earning income from the family and 1 lost the job. That kind of scenario. Because last couple of years, 2019 to a certain extent, 2020, 2021, our tourism income would have been way below what we were normally doing. Although you might hear we have lost about $4.5 billion due to that, I don't think it is entirely true. Of course, our income in 2018 was $4.5 billion, but of course, if the airport was open, Sri Lankans were also going out, right? So we saved some money as well. And that I think is about $1.5 billion, what Sri Lankans used to spend outside. So while we got about 4.5 billion income, we saved, while we lost that, we saved some money as well because Sri Lankans stopped going out. And also, although the tourists came here, that entire thing is not free cash flow to Sri Lanka. Because if a tourist was here, he will be driving around, right? So how about that fuel? There will be an extra demand on fuel. Maybe some food items. Australian beef, maybe some Argentinian wine, right? So that is foreign currency. So while we lost that 4.5, we may have saved something. But again, tourism is a high value added business, so we should have lost quite a large amount there. So probably all in all, we may have lost about $2 billion in my estimation, considering the net value addition of the industry and also what we may have saved by Sri Lankans not being able to go out of the country. So we lost that. It is quite a significant amount. And lastly, unfortunately, we see a drop in remittances as well. I think we were hitting about $7 billion in remittance in 2020, but now I think last couple of months we were looking at about $270 million, which is way below what we used to do per month, which was about 500 to 600 million earlier, not even half of that, right? So there are reasons for these things, but essentially this shortage of foreign exchange reserves, how it would impact us, we will not have money to pay for essential supplies. It's that family situation. You need to pay for food, you need to pay for medicine, you need to pay for education, healthcare, and if your income has lost, so probably you need to think about what can I do now? Maybe pawn your jewelry, sell a land. That's exactly what we are doing, right? To get out of that situation. So whether it's the right thing, I mean, there's no question of what is right or wrong, we have to do something, right? So the real question is what led us here and how we should alleviate or address that root cause. It's a long-term thing. So because this kind of a thing is in a patient in the ICU, right? So no point of finding the root cause of the problem. You need to give some oxygen first, right? Put him out of the deathbed, which is very important. Yeah? Otherwise, to find that long-term solution, the guy has to survive. The patient has to survive. The country has to survive in our case. So one challenge is we will have lesser money to pay for our essentials, which we see, which is manifesting in the society as we speak. Probably fuel shortage we are talking about, electricity cuts we are talking about, medicine shortages. So we are starting to hear what we didn't want to hear, right? The next one, I think we spoke about it, the debt servicing requirement. So this is a chart. What does it look like for the next couple of years, next 3-4 years? Each year we have to pay in the form of interest and capital, roughly about anywhere between $4 to $5 billion each year, right? And if you look at the Sri Lankan economy, how much is our average exports? Historically, it has been about $10 billion. I think last year, 2021, we got up to about $12 billion. Imports have been about $20 billion on average. And last year, probably it's a little higher, 21 point something. So we are doing double the imports of exports. And that is not a sustainable way of life. someone has to pay somewhere down the line. However, this gap of 10 billion on average was bridged by tourism of about 4 billion, let's say services income, and the remittances of 6 billion. But that's not only the current account, we had a capital account also where we borrowed to do investments. The large infrastructure projects, large developments, highways, and whatnot was built on borrowed funds. So, in addition to that current account, we have to serve our capital obligations as well, which is creating this problem, which is largely creating this problem. Normally, I mean, I'm sure you have learned about the NPV theory. Ideally, you should invest in projects with a return greater than the cost of capital. So, I think that is where the problem will probably get confined to or reduced to. Are the investments yielding that return equal to the commercial borrowing rates which we did? I think some of these borrowings came at the end maybe dollar rate of about 6%, which is quite large. Whereas those days multilateral agencies would have led to us probably about between 2 to 3% or probably even lesser than that. So we have increased the borrowing cost significantly over the last 10 years or so. And as a result, probably we are not getting enough yield to pay that. So, if you are not getting enough yield, what can you do to service this debt? The only thing you can do is to run a Ponzi scheme, right? Which Lebanon did. Lebanon did for a while successfully, and of course it had to fail. It did fail in 2019. So, what's a Ponzi scheme? It's like a finance company on the bankruptcy, right? I mean, we have some examples like the Sakpatis of this world, right? You were borrowing at 48%. 48% was probably an anomaly. Let's say you're borrowing at some rate, but your lending can't get you that rate. What businesses could give you 48% return? So the moment you can't get that income to service your debt, you have to borrow more. You borrow more, you pay someone's interest out of new capital that you borrow. You can run this for a while until the investors get little uneasy. And how would the investors get little uneasy? Maybe one guy is defaulted or payments get little slow. In a country's case, someone watching you gives you a warning. So which is the credit rating agency, right? So which happened a couple of times. The rating which was about B got downgraded now to double C. So it goes from triple A, double A, triple B, double B, B. So it's a long list and we are at the bottom of that list, right? So which has a huge implication. What does it mean? Someone is telling, look, this guy is about to default. And then what happens? Whatever the pipeline we would have had in terms of financing is getting drier by the day. Why? It's a too risky place. Consider yourself as an individual. You hear there's a problem in a finance company, would you put your money there? No. Actually, it will be worse. Why? Even the guys who didn't know about this will want to pull the money out. So it will accentuate the problem, it will aggravate the problem. People will go and withdraw, which happened to Sri Lanka. I think in 2019, when this initial downgrade happened, a lot of guys in the treasury bond market pulled the money out. I think at some point, if I'm not mistaken, the treasury bond stock, about 12% was owned by the foreigners. Now that number is less than 5%. So that's a large amount of money. It's a few trillions of rupees going out as foreign withdrawals. And that happened in the stock market. 2020 and 2021 both, I think, net withdrawals, when I say withdrawals, sell-offs of foreigners would have been about 50 billion rupees equivalent in each of those 2 years. So altogether, they would have lost about a couple of $1 billion right there, right? And they would have been not doing it probably if they didn't get this warning, or probably would have got more money. So it's twofold. We don't get new money, and on top of it, even the existing guys who had given us money are taking it out. So we need to address that investor confidence problem, which is a very important part of that equation. Give that comfort back. First, to hold the existing guys. Two, to get some new money. Non-debt cash flows idea. So now we see, to manage this situation, the government has to do something, mainly on the import side. Import controls. We see a large amount of import controls across industries, what they deem to be non-essential. Yeah? But which is negative to the economy. Why it is negative to the economy? I mean, just think about something like Naval, which was the hardware industry, which was largely run on imports probably, right? The tiles, the ceramic, the bathware and all that. I'm sure most of those guys would have gone probably out of business because you don't have your supplies. You can't import most of these items. And that will create less productivity in the economy. And the guys who are working in these shops probably need to look for alternatives. And that will create an unemployment problem. It will increase the level of unemployment in the economy. Not only that, it will add to inflation because what we could have imported 100 probably is now manufactured locally, and you have heard of the concept, the comparative advantage. A country should do, I mean, you can't do it theoretically, but ideally a country should focus on products and services where you have a comparative advantage. In my view, probably it should not apply to essentials because we should have some sort of security in terms of, say, food and essential things. But otherwise, we have to focus on where we have comparative advantage. Probably ceramic is not something where we have comparative advantage, maybe compared to China. So it would have been cheaper for the consumer to import it and purchase it here and focus your energy on something else. But of course, it's a priority to stop certain imports because we have to save the currency for more important needs, which could be fuel, which could be medicine, and so on. But due to this, it will add to the inflation, right? I'll just jump to that slide. So it will add to the inflation. The Sri Lankan inflation probably is due to two things. One, partially due to import controls, and also due to a lot of money printing that happened over the last 1.5 years. Probably more than ₹1 trillion printed over the last 18 months or so, right? So that money will come into circulation, but I don't think production of goods and services will go up to that extent, right? Because if you look at GDP reduced last year, so you're producing almost the same amount of goods or lesser amount of goods, but more money chasing after too fewer goods. Demand supply theory will increase the prices, Yeah? So that combined with short supply will work together. Probably it will snowball into a bigger problem, and let's hope we'll not get to that hyperinflation scenario. So I'll give one example. In Lebanon, I think in 2019, they ran a pegged exchange rate system where the Libyan currency was pegged to the US dollar. The equivalent of 1,500 Lebanese currency was $1. Now it is 21,000. I mean, that's unimaginable. But that's how, if a free fall happens, how it could happen. It could happen faster, right? Sorry. It's slightly complicated because I think Lebanon was mainly using US dollar as a medium of exchange. So it's slightly different to the Sri Lankan situation. But when things go out of control, it could go out of control quite badly, quite fast. So I think it will be a top priority of the government to curb this inflation, because who is beaten by the inflation most? The very poor of the society. So actually in this kind of a scenario, the rich and poor gap will widen. Because if you ask me the printed money, where did the printed money go? Probably most of that money would have gone to 5% of the population or 10% of the population. Who's leading maybe certain businesses, maybe who got some money out of stock market, right? But maybe 90% or 80% of the population for sure would have had a lesser real income, if I may use the economic term. So your purchasing power has gone down compared to 2 years ago, despite the printing. Probably that is why the government identified the need to give that package last week. But again, it only goes to one segment of the society. The guys who are not getting it will be worse off after that event as well, because sure inflation will pick up with that extra money coming into circulation. So if I didn't get that 5,000 rupees, I'll be worse off because my real purchasing power would go down with that. So the inflation is a big challenge. So this is a perennial challenge Sri Lankan governments have been having for a very long time, the widening budget deficit. Our income is way less than what we spend as a government, as a country, the government national expenditure. So historically, the deficit has been about 5%. Look at those last 2 years. 21 data is not with me, but I'm sure this must be double digit if not worse, 10, 11 or more, right? So 2010, 19, because we reduced our tourist income with that Easter tax, 10% deficit, last year 11% deficit, this year we may be looking at 21, that is probably about 11, 12% again. So this is a huge deficit. You can't run based on this. So look, please understand, this is a vicious cycle. When you have this kind of a budget deficit, government has to still pay the government salaries. You printed money. The printed money will fuel inflation. Then again create more problems in the society. Poor will get poorer. And again you need to give them concessions. So it's a never-ending vicious cycle. You have to break this cycle. So one way to break the cycle is of course to increase taxation, which will be painful. But I think we need to focus on increasing income is important, but cutting the unwanted expenses is an absolute need of the hour. Maybe the structures that we carry are not sustainable. So you need to do some surgery with regard to our cost structure. I mean, that's what a company would have done, right? If you lost your income, your cost base is too high, would have done something. Maybe lay off some people, not the best thing to do. But what to do? First, the entity has to survive, right? Or reduce the salaries. A lot of companies did that in 2020 or 2021 also, right? Because I think you need to prioritize what is the need. So big challenge. So these are, I would say, essentially the broad set of challenges we have. Summarizing, little foreign reserves and the huge debt payments we have and the budget deficit, and of course the inflationary pressures that society is facing. And the sad thing is all of this happening simultaneously, parallelly. It's something that we can't address sequentially. We can't, okay, let's deal with the debt problem and then let's take the inflation problem. Unfortunately, we can't, because these are mostly intertwined. So we need to get to the bottom of it and find a holistic solution which addresses each of these components, right? So let's look at what we could do in terms of revival. And some are short-term measures, some are long-term measures. And some of these could be painful, mind you, right? And everyone will not like some of these changes. But I think you need to start somewhere, otherwise it will probably get into that free fall scenario, which the government is the last one who will like that to happen. They will not want that to happen. And so let's see, not in a particular sequence, but what are the few things we could do, or we should do rather, in terms of getting it back, building it back better. So obviously we have a short-term problem. We have a lot of things to pay, and that's that family situation. What would you do? Look, you are not getting your income. You have sold whatever you could do. You have pawned your jewelry. Still, that guy is coming after you. Right? So you need to negotiate with him. And sometimes in an individual's cases, this could lead to suicide. We have seen that. We have heard that. When you can't pay your debt, people have committed suicide. But as a country, we can't commit suicide. That's not an option, right? So talk to the lenders, do something. So what we call debt restructuring. And I'm sure you have seen this on news. I think President requested the Chinese foreign minister help us in debt restructuring. But China is not a big lender to us, by the way. The total Chinese debt, if I'm not mistaken, is about 10 to 15% of our total debt. So it is not the biggest lender, by the way. So how we could help restructuring our debt? Maybe by giving us little more debt to solve some of the other commercial debt problems that we have. So what are we going to do in debt restructuring? Immediate thing I think we need to address is principal repayments. 500 million, 1 billion, and as I mentioned, total about $4.5 to $5 billion in each of the next 4 to 5 years. Talk to them. We could come up with some solutions. Look, we'll pay you interest, but capital, give us a little more time. Maybe 2 years more, 3 years more. And you can agree, let's pay a little more interest, high interest. If the rate is 5%, let's pay 6. It's a trade-off, right? It's a trade-off. But one thing we can't afford is, not that we can't afford, we should avoid is a default. If a default happens, so there will be a lot of repercussions, particularly on the business community. For example, think about a bank in Sri Lanka. You are representing a country that defaulted its sovereign obligations. So particularly when it comes to international trade, your LCs probably will not be respected, will not be taken seriously. No one wants to do business with you. So that will have a serious implication on business operations, business confidence, and let's forget about getting new investors on board, and that will have serious economic issues, which will eventually lead to social issues as well. Why? If people are losing jobs, they'll be on the road, and that eventually will become, on top of an economic problem, it will become a social problem. Probably we are just starting to hear that social angle of the problem, maybe measured by robberies, crimes, and so on, right? So that is what other countries have seen. South America, Lebanon, Greece to a certain extent, and it will eventually boil down to social problem, economic problem, because we are all in it. It's at the end of the day, humans are in it, right? So debt restructuring, we are trying few things, I think. We are talking to the Chinese government, we are talking to India of getting temporary credit lines, but I think probably there's another option where everyone is talking about, should we get IMF assistance, International Monetary Fund assistance. So what is IMF? It's an institution formed by member countries. I mean, please don't quote me, but something like, let's say, it's a society where members have put money and form. I mean, one thing I can probably, it's not really an analogy, it's something like a Maranadara society, right? In a distress, you go and help that family. That's the objective of that society. Of course, how it works could be a little different to how IMF works. Everyone puts a certain amount of money per month, but IMF, money comes depending on the economic capability of each country. So US may be funding most of it, but other countries are also funding. This is, in a way, is your right as a member country. If you are in distress, that's why you are there. Go and ask for help, right? Go and ask for help. But the model should work. What do you mean? Think about IMF. Someone got a loan, had a party, right? Finished the money and comes to me for a bailout. I can help him, not a problem. But then how about the others who funded me, right? That will completely distort the confidence of other members. Look, that's a model which is not sustainable, right? Someone took a loan, was not very responsible for that money, spend it out, and come to me for help. Helping is not the problem, but that help should come with some pain. Otherwise, it will be a bad example for the rest of the guys who are out there. They'll also start partying, right? And think IMF will be there as a last resort. So, look, I will give you money, but with some conditions, conditionalities. So, what could be those conditions? Is with the objective of helping that country out to get out of the root causes which caused you to get there. So, it is a longer term solution. So, I have listed a few which are typically conditions of IMF, and nothing wrong in them, I would say, because otherwise it will set that bad example for rest of the members as well. So what are those? Simple. Improve the budget deficit, because if you don't improve the budget deficit, you need to keep borrowing. It's like you have an income of 100, you spend 150, and how long are you going to do that? As long as someone is willing to finance you, you can, but the music has to stop. It will stop, right? So improve the budget deficit. So what are the solutions? Simply two things. Increase income, which is taxation, or cut the expenses. So it could be, in our case, could be certain public sector curtailment, shrinking, right? And removing price controls. Fuel could be an example. No way you could do this. Global oil price is going up, you are giving at the same price. It's not going to work. I mean, it can work as long as someone is financing it. So who should finance it? No one else but the citizens themselves. Think about it. So actually it will increase the inequality of the society, the price controls. Think about it. If the fuel is on a subsidy, who will benefit the most? Someone who's driving the most powerful vehicle. So you have a 2400cc engine, you are getting the biggest benefit. Because per month you need 300 liters of petrol, not 50 liters for your motorcycle. So who gets the biggest benefit of this subsidy? The most rich, the super rich, which is bad. And could you segregate the economy and give each one a concession? You can, but it will be manipulated. It's a matter of time. the concession you are giving to the fisherman will get by the boat owner, right? Not really the right person down there who need it most. Because, I mean, it's very difficult to monitor, it's very difficult to execute. People are smart. They'll always find a way to manipulate and get on the right side of it, right? So, obviously, they'll ask to do this restructuring. SOEs, state-owned enterprises. I mean, we've been hearing these names. Now CPC says we are 300 billion rupee debt. Electricity board has no money, so they are thinking of not getting coal or fuel and cut electricity. Sri Lankan Airlines, we've been talking about it. So probably if it is 20 billion loss making, who's paying for it? Someone who has never seen the airport, who has not taken a single flight, has to pay for it. So it's unfair. And you think you are protecting something, actually you are doing a disservice on the other hand. If someone is consuming, pay for it. If you can't pay for it, use something else. Because if something is not viable, this has to be sorted out. How much of someone else's problem you can carry for how long? And not only us, the governments like Margaret Thatcher's UK government had to do this. They had a series of privatizations in 1980s. Why? You can't carry these national assets as long as they are inefficient, ineffective, uneconomical, and how you are going to address that problem? At some point, you have to bite the bullet and move on. Yeah. Liberalizing the foreign trade and exchange rate. Exchange rate is a good example. If we want to encourage the exports, probably the exchange rates need to be flexible. No point of trying to keep it at a particular level. The best example is remittances. Why the people are not sending the money here? Because they think probably 203 is not the right price. And if it was something else, I'll not speculate what should that be, but if it was something more, I mean, it's normal demand supply theory, more people will take it, right? More people will send the money. So probably would have had a lesser problem. It would have had a lesser problem. Make it free, make it flexible, right? Doesn't mean the government should not intervene at all, but I think intervention should be minimal as much as possible, because usually you can't beat a market. Very difficult for someone to beat a market. How can you beat a market? Market is a collection of so many things, so many people. And can one institution beat the market? It's going to be difficult. We just touched upon this. Restructuring of SOEs. Let's just quickly look at what are the problems we have. We talked about pricing policies. You are selling something at a subsidized price. It's not free. Someone has to pay. Someone is paying. Who's paying? Probably the guy you wanted to help is paying most. Yeah? Lack of competitiveness, inefficiency. Probably in some of these SOEs, a government after government, minister after minister would have filled with their own supporters, right? Which is a fact. So what does it mean? You are carrying an overhead cost which the company cannot cover. The institution cannot cover with its revenue, which means you are speaking. And on top of it, those guys may not be responsible also because they have some power affiliated to someone who put them in those positions. If I got a job because of a minister, then I think I'm an all-powerful guy, right? I'm not responsible, I'm not accountable, because I think there's someone to back me up, which is not a very sustainable economic model. And sometimes these are not adequately capitalized, because the government can't keep capitalizing everything, right? I mean, think about a family business. How many family businesses you can have? That's why companies go public. That's why companies go do IPOs. That's why companies do debentures, because private owner can't keep funding everything. But if you take Sri Lanka, the most of the economy is government controlled, at least the big percentage of it, which is very different in other countries, particularly the developed countries, because you need to encourage private entrepreneurship. Then only those new entrepreneurs will come, the new business will come, and more importantly, competition will set. Now think about a gas example, right? No private company would be able to run that cycle of a couple of months with that kind of incidents, with that kind of unaccountability, right? A private company would have had to pay dearly for that kind of thing, but still it survives because it's state-owned. Who's accountable? Not too many people, it looks like, right? So what could be some of these reforms? At a very basic level, give them KPIs, performance targets, but again, if the chairman is affiliated with a political guy, then he may not be too accountable at the end of the day. So, I mean, no point of setting KPIs. How are you going to implement? If you don't achieve them, are you going to sack him? If not, no point, right? And probably empowering the boards, maybe more professionals to be in those boards, not really the political people in those boards, and eventually privatization or at least listing of some of these. It will be more transparent, it will be more accountable for the public. I think there are good examples in Sri Lanka. Sri Lanka Telecom, which was a quite inefficient institution. You may remember, maybe you can't. In 1990s, you had to wait for about 6 months to get a telephone connection. Yeah? But with privatization, with listing, foreign shareholders came in, and we had very good results. And now you know it's a very, very competitive business, competing with global giants. Something like Lanka Hospitals, which is a government-owned hospital. Now you have quite best-in-class service, and you can't complain really of it as a hospital. But if it remained a public one, probably efficiencies would have been different, because it's not transparent. Now it's a listed company. You have to put the accounts out. There's a board, independent directors who can ask some questions, audit committees, remuneration committees who will look at things, how to improve these things. So there's some better level of governance in these institutions. Yeah. So these could be some of the reforms we could look at in SOEs. So this is a big problem. We need to address our balance of payment problem. We can't live that life where we sell for 10, sell for 100 and buy for 200. That's what we have been doing. Exports 10 billion, imports $20 billion. Right? That's a too comfy life, which probably was subsidized by the remittances and the services to a certain extent. So at least until we improve those aspects, we have to cut the lifestyle, which we are forced to cut these days. If you go to supermarket, your choices are not that wide, that great. So, I mean, it is happening. Anyway, we'll be forced to do that. But I think more than that, more than automatic correction, we need to take some meaningful steps to encourage exports. In other countries like China, they give a lot of incentives to exporters. It could be subsidized borrowings just to encourage export industries. It could be rebates, tax rebates. You pay a tax, but you get it rebated if you are an export company. Various concessions, maybe energy concessions, because that is where you need to drive the behavior. KPIs are linked to performance, performance are linked to incentives. So, do I want to be an exporter? Then you will look at what benefits I would get by being an exporter, right? So, if I have a lower taxation rate, which is the case in Sri Lanka, we have a lower taxation rate, but can I borrow at a lower rate? Would I get a tax rebate? And would there be a special consideration for me as an exporter? And that's how you should drive the behavioral change. And similarly, some of those things should be negative for imports. Yeah, it could be taxes, but of course the world is complicated. Under free trade, we may not be able to implement all of that. So if IMF comes, probably they want to liberalize the trade also. It's complicated, but absolutely unessential imports, I think we can think about still cutting. Until at least we improve our tourism, we improve our service industry, maybe IT, BPO, KPO, those businesses. Simple example in tourism. We should look at high value addition. Maldives, probably on average, they charge $1,000 a night, right? A hotel room. Here, probably it's 1/10 of it. And what we can do to get there, probably we can't convert everyone to be at that paying category. But I'm sure we can improve our offering. We have a lot to offer as a country. But how about things? I think these things are real missed opportunities. Education tourism. Actually, it's the reverse for us. Imagine our students going to Bangladesh, Nepal for medical studies. That's crazy. And some of the unheard of countries, the Belarus, the Georgias, as med schools. And could we have done a private medical school? I think there will be different political opinion on it, but I think it's a great missed opportunity as a country. I mean, we should not look at our students, we should look at the South Asian students. The biggest thing we have as a country is the locational advantage, where we are. We want to be a hub. And look at our market. India, 1.2 billion, 1.3 billion is growing up every day. Pakistan, maybe another 200 million. Bangladesh close to 200 million. It's a 2 billion population just around us. And that is what you should think about, not this small 20 million market. We should think big. And how many global companies we have built? Not too many. And at one time, Nestle, a Switzerland company, had a market capitalization bigger than Switzerland GDP. Right? That's all what we wanted. 5 such companies would have changed the dynamic. And that's what exactly Singapore has done. Right? And all those companies are exporting. And it is not relying on domestic market. So that mindset change should happen. Should happen. Right? So we talked about the need to encourage FDIs and so on. So probably I would like to end with this, the general improvements. So those were specific improvements, the debt restructuring, addressing the inflation, encouraging the FDIs. But these are sometimes mindset improvements, structural improvements we need, and probably as a society, what we should try to achieve together. Of course, some national policies have to come in. We can't have one government doing something for 5 years and a complete reversal of that in the next 5 years. We will go nowhere with that. At least identify a few key areas. Energy policy. Is it renewable energy or is it fuel? What is the mix? What do we want to do in 20 years' time? And make it agreed between everyone in the parliament, not only one party. It can't be one party policy. It can't get reversed in 5 years. Because these are 20-year investments, by the way. Which foreigner will come and invest here for 20-year project if in 5 years that whole policy is going to change? That's not going to work. So come to some agreement in key policies, key sectors, energy, education, healthcare, what we are going to do to the public sector, and those key decisions has to be made. And this is very important. Encourage entrepreneurship. I think one big problem we have in Sri Lanka is to do a business is not easy. A simple thing, if you are putting up a factory, to get a water connection, electricity connection, get the Rajya Sabha approval, the provincial council, whatnot, the deed transfer, could take months, if not years. And ease of doing business, we are just way down the ranking. Probably 90 something. We need to come to probably top 50 at least. I mean, let's not be too ambitious about it. Right? And red tapes. If you want to get something done by a government agency, how long it takes? And probably let's not talk about even corruption. Right? Cut this red tape. Look at America. What are the largest market cap companies in America? Amazon, Alphabet, Google parent company, Tesla, Apple, Microsoft. All of these are less than 40, 50 years old. All of these. If you take the first three, maybe Google, Alphabet, Tesla, and Amazon, probably they are less than 20 years old. Surely less than 30 years old. So all these are new businesses, mind you. What are the new businesses we have built? The last industry we have built is apparel in 1980s. Right? So IT, BPO, that's something, but still less than $1 billion exports as a country. There's nothing to write home about. Right? So we want to facilitate this entrepreneurship. Do you want to do a business? You would like to do a business, but if you face a lot of challenges to get the basic thing done, people ask for money at every stage of those approvals, and you will get disheartened. And that's where people will look for migration. So those structural changes have to come. Educational reforms, we talked about private education. I think we need to be open about it, right? I mean, by no means we are saying the free education should be abolished or anything. No, but within those limits, we need to encourage private education to a certain extent. Let's take this university as an example, right? If you could take few private students for money, obviously it will increase competition for you guys, right? Instead of a batch having 50, you will have 75, let's say. More competition. But there will be more money coming to the university as well. That money could be used for what? Research. Maybe improving your labs. Maybe improving the infrastructure. So the final product for all you 75, not only 50, will be a better product. The university will be more renowned outside because of maybe the research papers which can't be financed today. And it will be more acute for a maybe tech university or someone in more cutting edge solutions. I hear you have financial engineering course, right? So something like that. Can you get a professor down from the US to talk about what is happening in the market? Probably you can't afford it. But if you had that better financing, you could do. So individually, you will have more competition. But as a collection, everyone will be better than what it is today. So is healthcare, right? And we need to think like a hub. I think sometime back we wanted to be logistics hub, aviation hub, financial services hub, and so on. So what are the hubs in the world? Say in North America we have New York, in Europe we have London, Asia maybe Singapore, Middle East Dubai. What is common for all these hubs? Diversity. And if you go to a subway, you will see black people, white people, short people, fat people, everyone, right? From different genders, you will hear 10 languages. And sometimes you need to be open about it. You can't cater to a 2 billion market with 20 million population, it's not going to work, right? So probably it might mean, probably we need to open up visas, territories to outsiders, at least to the region to start with. That's how EU became so powerful. European Union, collection of 20 odd countries. And SARC will be a much difficult thing with 6 or 7 countries. Yeah. So obviously there will be more competition coming in. There will be certain jobs will be threatened. But as an economy, as a country, it will be a much bigger, much powerful place because what we could offer to the world will be a much bigger thing, much bigger thing. So I would like to end my presentation with a quotation from a book called Why Nations Fail, right? So I'll just repeat. Quote, nations fail today because of their extractive economic institutions. Extractive is who take from the public, right? They do not create incentives needed for people to save. We don't want to save if the real interest rates are negative. For people to invest, I don't want to invest in a business if there are a lot of red tapes. I need to pay for everyone to get something done. And innovate. I don't want to innovate something if I'm not protected on my intellectual property, intellectual capital. One big success of the US is what? The patent system. And you're given a patent for 20 years if you innovate a drug, and you can make a lot of money out of it. So you need to appreciate that private ownership of things. Yeah. Socialism is good, but it's not practical sometimes, right? You need to have private ownership. You need to be encouraged to earn for you first. I mean, would you be okay? You work for 100 and pay 60 to the government. It's not going to work. You feel sleeping at home is better, right? Extractive political institutions support these economic institutions by cementing the power of those who benefit from the extraction. Unfortunately, it sounds a bit familiar, right? But I think what we should do is to absolutely break this, and what matters is, the summary of that book is, what matters is institutions, institutions and institutions. Not the location. They give an example. A border between US and Mexico. One side of the border belongs to America, one side of the border belongs to Mexico. The American side, per capita income is $30,000, the other side is $10,000. It can't be culture. Both speak the same language, Spanish. Right? It can't be the DNA even, because all come from the same Mexican origin. Right? And Africa, they use examples. Botswana and Zimbabwe, for example. It's about the institutions, the government institutions, the political institutions, the judicial systems. So I'll finish with this one story, which that book says. Zimbabwe, ran into this hyperinflation scenario. So the government one time did a lottery, right? So everyone who has more than $5,000 in the bank account, Zimbabwean dollars, was entitled to one draw of that lottery. And the winning prize was about 100,000. So the bank did the lottery. Guess who was the winner? Robert Mugabe. Right? So I think, look, in such a setup, you don't have hope. So what we need to do as a country, as citizens, is to strengthen those institutions which can empower people, empower citizens to these three things. To save, you feel confident in saving. You feel confident in innovating. You feel confident in investing. If you don't invest, the banks will not have money. If you don't save, the banks will not have money. If you don't innovate, new business will not come. If the new business don't come, that is where we are. That is where we are. So it's a vicious cycle. We want to break it, and hopefully, as a collection, as students, as who are going into society, as us, the businessmen, people who are running businesses, have to put pressure at every possible opportunity. Then, hopefully, we'll get out of it. So, hopefully, when we meet again, we'll have a better story to say, tell, right? Better presentation to make. Thank you.
Right. Thank you very much, Mr. Senaka. I think we have a better idea about the current economic status and the recovery strategy. And on the same note, he emphasized the importance of being the right system and to set up the right institution, which is the key. And it's a long journey. So talking about one of the main strategy of recovery, I saw the point you were highlighting, sir, about the IMF assistance. So on this is something that we've been discussing and we see a lot of news in today. The government is looking for options. As you correctly said, we have an IMF as an option. On the same time, government is considering about alternatives like looking of assistance from India and China. So as a country, in your opinion, how do you see this and what is the implications to us?
So I think the underlying problem is the fact that we want to restructure the debt. How we get that restructured is few options, IMF or bilateral or multilateral. So India, China comes into that bilateral equation. The only issue is why India and China should help us. Right? There's no obligation. And it's great if they have an obligation because you are the neighbor, my good little brother, right? Or China, we have had historical relationships. As a result, I am obliged to help. If that is the case, that's great. But IMF has an obligation in a way because you are a member country, and that's its mandate to help when you need my support, when you need when you are in distress. So I would say out of the three, if I reduce it to three, IMF is kind of obliged to help, and we have a right to go to them. Other two, if they are willing to genuinely help, absolutely no problem. But then why would they should do that? Could there be political and economical implications, repercussions later? So that is something the people who are negotiating should understand well. Because no point of realizing that 5 years later, the deal is signed. And we need to pay compensation also if you want to get out of it. Right? So I think hopefully people will assess the pros and cons and make that right call.
Right, thank you. And I'm sure you have questions, so please you can put it in the chat where we can ask that also from Mr. Senaka. On a positive note, we see that we see a lot of crisis. On the positive note, we see the CSE, Colombo Stock Exchange performance has been one of the top. And I saw in the last week, we have been the best country in terms of CSE performance in the world. So which is quite alarming. So how do you see these two arrangements where we have a financial meltdown in one end, and then market is the best performance, having a percentage of 80% more in terms of the market performance. How do you see this connectivity?
If I want to explain that theoretically, in a high inflation environment, savers are losers. Right? Because if you save your money in a bank account, what is your interest rate? Maybe today, at best, you will get about 10%. If you talk about inflation of 12%, the published number, we are looking at a negative real return of 2%, which means the longer you save, the more you lose, because your purchasing power is lesser after that period. What costs 100? If inflation is 12, it will cost 112 at the end of the year. But you got only 110 with interest. So your purchasing power, which is the real purchasing power, has gone down. But being in equity, what are you doing by buying a share? You are owning a company, right? So what is that company doing? It is producing something and it is selling something and it is earning a profit. And probably they'll be increasing their prices with inflation. So there's a greater probability those companies will post more profits in an inflation environment. Of course, not everyone. It depends on where you are. Say if you are a market leader in a particular segment, probably you have wiped out your competition under the current environment because no imports even. So probably it will be in a much stronger position than you were before the pandemic in terms of the profitability and the economic modes, what we say. And also there are a lot of dollar earning companies on the CSC. So if our problem is a dollar problem, if we think currency should devalue, probably those companies have much higher potential. So it's not a general remark, but there's a good possibility some of those companies will be in a better off situation in a stressed environment like this, particularly inflationary and particularly higher rupee depreciation is on the cards.
Right. So in terms of capital,
and also, sorry,
yep, sir.
and I think the stock market revival happened in the second half of 2020. There the interest rates were very low, about 4 or 5%. Maybe fixed deposits was giving about 5%. So then obviously there will be a capital migration happening. People will look for alternative investments. I mean, bank account will give me 5%. It's not enough. What else I could do? So it's a partly explained by the demand supply theory as well, because the money will look for alternative investments. Not only stock market, I think real estate also probably has been a big beneficiary. Maybe the apartments, the lands would have sold at probably higher prices. You might see the same thing happening in alternative investments as well.
Right. So in your opinion, what are the alternative capital investments for an investor in current situation to increase their wealth?
Okay. In individuals?
Yes, as an individual.
So I think probably the discussion should start with what is your risk appetite. Because if you have only some money, probably even you should not go for stocks, because what is more important you have to figure out. I mean, usually that's how you form an investment policy. The needs could be different. Needs could be basically safety. Say you need 5 million in 3 years time for something. You want to build a house, you want to pursue foreign education, further education, or you want to marry, have a big wedding. So depending on your need, you have a need. But if you put your money in stock market, there's a possibility that money will come down, right? So it depends on your need. If it is safety, probably you should still play in fixed income instruments. But if you are looking for growth, then probably you can think about what is inflation hedged. Stocks could be an option, real estate could be an option, as I mentioned. These days you have more exotic instruments like the cryptos and all that, right? But you need to understand before you put your hand in it. And I think it depends on the risk appetite, but I would broadly say stocks, real estate would generally do better in an inflationary environment like this.
Right. Actually, the question also came from the audience, how the cryptocurrency and the blockchain will help in this manner as a country. Do you see some opportunities over there?
It'll be a long conversation, I would say, right? But I think we need to set the right regulatory framework. One good thing is that since it's a new thing, probably no other country in the region is offering this as a medium of exchange. We could be kind of a movers, where we could get a lot of new investors, new capital coming in and doing that. But it could be very negative also if you don't have the right regulatory framework. There can be free movement of capital out, and it could be even worse off. So I think we need to understand what we are going to do and set the right regulatory framework first. And even in Europe and in other countries, not many countries have done that though. So I think understanding is important from a systemic point of view, regular point of view.
Right. Any more questions from the audience? And there was a question on the 1 billion relief that the government is going to give to the public servants. I think we touched on that as well. So do you think it will be a major hit on in terms of exchange rate also?
So look, more money coming into circulation, as I said, is definitely will increase the inflationary pressures. The impact on exchange rate is indirect, because the more money comes to your hand, no matter what, some of that money will go to imports. Right? For example, so if you have more money, you want to take a holiday which you otherwise wouldn't have done. So you go to a hotel, and the hotel you consume, let's say, a bottle of wine, which would have been imported. So indirectly it will fuel imports, and no matter what controls we have, definitely it will have some on import needs. Let's put it that way.
Right. So I think have covered most of the areas that we should know about in the current context. So thank you very much for your time, Senaka, and we really appreciate your guidance on this. And I'm sure, like you correctly said, it's the strategies are there, now it's right time to implement and to have the always the right attitude as a country and to move forward. So with that, I would like to conclude.
Just one comment.
Yes, sir.
I think what we should do is we should not take it as all doom and gloom. I mean, it is there. I mean, what we could do, we are here, whether we like it or not. But I think we should start seeing the silver lining in the dark clouds. I think it will be a great opportunity even for the government to do some of the reforms which are, I think, long overdue. At least you can use IMF as an excuse if you really want to put it that way.
Yeah,
right?
true.
Because I think some of the reforms are long overdue. Make use of this opportunity and just drive them home. I think that will be the best outcome of this thing. Probably, if we look back after 10 years, probably this could have happened for better. I mean, if we rightly use it.
I think that's a very good point. This is the right time which has been able to apply with all outstanding strategies that they were planning in the last couple of years. Right, so with that, we would like to conclude the today's session and thank you very much for your participation. And again, let me thank again to Mr. Senaka to come forward to meet us with his busy schedules, and I'm sure all the audience get a lot of knowledge on this aspect, and we would like to continue your in the future as well on these endeavors. Thank you very much.